Hi everyone, hope you're doing well. This is Karthik sir here. Today we are going to revise CARO 2020. Okay, now CARO is a very important part of your CA inter audit syllabus. I always say so because you can write so many things in so many answers with reference to CARO. You can give the reference of the CARO clauses at many places, so you should know the CARO clauses very well. Okay, so let's start with the CARO revision. Let's start with this. First of all, for which companies is CARO applicable? CARO is applicable for all companies except foreign companies. However, for the companies that I'm going to say now, CARO is never applicable. You have to remember a code called 8 BOSIP. Section 8 company never applicable, banking company never applicable, 1% company never applicable, small company never applicable, insurance company never applicable, and finally, for certain private companies, it is not applicable. Now, what are these certain private companies? Any private company which is not a holding company of a public company, any private company which is not a subsidiary company of a public company, any private company having paid up capital plus reserves of up to 1 crore and having borrowing up to 1 crore and having revenue up to 10 crores. For these private companies, CARO is never applicable. Okay, so you have to remember this very carefully because CARO applicability questions they ask in the exams very often. Okay, now let's enter the CARO clauses part. Okay, CARO clause 1 is in relation to property, plant, and equipment. What all should the auditor check? You have to always remember these 5 points. Auditor should check, first we'll do this. Auditor should check whether the proper records have been maintained by the company or not in relation to tangible assets, in relation to intangible assets. Second, company auditor should check whether management has done proper physical verification in relation to the property, plant, equipment, and whether they have found any kind of material discrepancies. Third, whether title deeds of the property, plant, and equipment is in the name of the company or not. And if the title deed is not there, then you have to there is a table. You have to fill that table, and you have to say then who's owning the asset, why is the company using the asset of some other person, is the asset belonging to any related party, promoter, or any employee or director of the company, is the property that we are talking about with whether it is under dispute or not, that you have to speak. Next is whether there is any revaluation of the property, plant, equipment. Now when they say revaluation, they mean this. See, whenever there is a revaluation, no, auditor will definitely mention the revaluation is there. But when should the auditor mention the amount of revaluation? He should mention it when the revaluation, that is a change in the amount, is 10% or more. It can either be upwards or downwards. Remember, um, whenever you look at the asset value, you have to look at the class of the asset. Example, you will not look at one table or one chair. You will look at the furniture. The class of the asset is furniture. So you have to look at the value of furniture. Suppose if it is 1 crore, suppose the value is going to let's say 2 crores. So the increase is by 20%. So if the increase is 10% or more, or if the decrease is or the value that declines by 10% or more, then the auditor will mention the amount of revaluation also. So if revaluation is there, he'll definitely mention revaluation is there. But when will he mention the amount? He'll mention the amount only when the change is 10% or more, either upwards or downwards. Okay. Next is if any proceedings have been initiated or any proceedings are ongoing in relation to Benami Transaction Prohibition Act. So any court case that is going on with the company's name in it in relation to Benami Transaction Prohibition Act, auditor has to mention in the CARO report. So these are the 5 things. Okay, now proper records, physical verification, title deeds, revaluation, and Benami Transaction Prohibition Act. Okay. Clause 2 is inventory. In relation to inventory, the auditor has to see whether the management has done the physical verification, whether the procedure of the management is appropriate or not, and while doing the physical verification, if the if there is any discrepancy in the value of inventory, and if the discrepancy is 10% or more, again as I told you, either upwards or downwards, then the auditor should see whether proper entries are made in the books of accounts or not. So basically, book should be proper. Next is in relation to working capital for inventory. So in this clause 2 of CARO, you have 1 point in relation to physical verification. Your procedure should be appropriate, and the last one is proper records are maintained if there is a discrepancy of 10% or more. Second is in relation to working capital. If the company has taken any kind of loan from banks, which is a working capital loan, for an amount exceeding 5 crores, the company must have given its current assets as security. So the bank must have told the company to provide quarterly reports, quarterly statements, so that the bank can review it on time to time basis. Auditor has to report whether the quarterly reports that have been provided to the bank, whether they are in agreement with the books of accounts. That is what the auditor should check. Okay. That is in relation to your clause 2, that is inventory. Clause 3, that is, we call it as lingu se to kofilo. Lingu se is basically loans, investments, guarantee, security. To kofilo means company, firm, LLP, other parties. So when the company gives any kind of loans, investments, guarantees, security, it does to any company, firm, LLP, other parties. In that case, auditor has to check few things. So let's see this one by one. Auditor has to first check, while providing, if the company providing loans, whether a loan has been provided to any JASU. JASU is a code that we use. JASU is for joint ventures, associates, subsidiary companies. So if the company is giving any kind of loan to joint ventures, associates, subsidiary companies, then in that case, the auditor has to mention in his CARO report the aggregate amount of loan given during the year and the balance outstanding on the balance sheet date for loans given to JASU. This point has a separate area also, that is basically loans which are given to other than JASU. So if you give a loan to other than joint ventures, associates and subsidiary companies, then what is the aggregate amount of loan given and what is the balance outstanding on the balance sheet date, that you have to mention. Simple. That is the first area. In clause 3, second part, auditor has to check whether terms and conditions should not be prejudicial to the interest of the company when the company is giving any kind of loan, guarantee, security. Third, when the company is giving any kind of loan, it means it is also, it will take the EMIs whenever the installments are being paid. It can be your monthly installments or yearly installments, however the other party is paying, whether there is a repayment schedule or not. So auditor will first check whether there is a repayment schedule and whether repayment schedule is followed regularly or not. Okay. Second, if the amount is overdue for more than 90 days, then whether reasonable steps have been taken for recovery or not. Simple. In the end, the auditor will also mention in the CARO report this important area. See, during the year, if any loan has been renewed or extended or fresh loans have been given for existing loans, then in that case, the auditor should mention the amount that has been renewed, extended or fresh loan that have been given. And second thing, the percentage of the amount of renewal, extension of loans or fresh loans for existing loans to the total loan that was given during the year. So during the year, suppose the loan that was given was, let's say, 100 crores, and the loan that was given to any related loan that was given for loan that was renewed or extended or fresh loans were given for existing loans are, let's say, 25 crores. Then the percentage becomes 25%. Okay, no, 25%. 25 crores divided by 100 crores is equal to 25%. Okay. Similarly, last point is also very similar in this clause 3. When the company must have given any kind of loan to any related party, promoters, the auditor will mention the same two things: the total amount of loan given and the percentage of the loan given to related party and promoters to the total loans that the company has given. Suppose to the related parties and promoters we have given 10 crores loan and the total loan that the company has given is 100 crores. So you understand the percentage is 10%. Okay, that is basically this area. This is completes your clause 3. Clause 4, your lingu say under section number 185 and 186. So basically, whenever the company gives any kind of loans, investment, guarantee, security, you should comply with section number 185 and 186. 185 and 186 is mainly there in CA final. 185 deals with loans to directors and 186 is inter-corporate loans and investments. That covers this part. Simple. That is basically this area. Next is your clause 5. Clause 5 deals with acceptance of deposits. If the company has accepted any kind of deposits, the auditor should check 4 things. First is whether RBI directions have been complied with. Second, whether rules which are framed for deposit acceptance, whether those rules have been followed or not. Third, whether we'll take the 4th point just ahead, that is whether section number 73 to 76 has been followed, and if suppose RBI direction rules framed section 73 to 76 have not been complied with, then basically the company will face some kind of an order will come from a higher authority. So order can come from courts, company law board, national company law tribunal, any other tribunal, RBI, whether those orders have been followed or not. That is what the auditor is checking basically. Easy. So auditor is basically checking rows. What is rows? RBI direction, rules framed, order, sorry, RBI direction, rules framed, okay. Order of the authorities which I told you, that is court, CLB, that is Company Law Board, National Company Law Tribunal, other tribunals, RBI, and SE in the end is section 73 to 76, okay. So it is R square OSE, E is small, okay. E small means it is SE, section SE, okay. Next is your clause 6, whether cost records have been maintained properly under section number 148, subsection number 1. Next, you have clause 7. Clause 7 talks about statutory dues. Now, whenever statutory dues comes in the exam, you have to see whether it is undisputed or whether it is disputed. If it is undisputed, as on the last day of the financial year, if the statutory dues which are there, which the company had to pay, these are undisputed, means there is no fight with the government, with any authority. We know that we have to pay this much amount. So the undisputed statutory due on the last day of the financial year is overdue for more than 6 months. It means we have not paid the amount from the due date and more than 6 months has passed. So in that case, the auditor will mention in the CARO report. Simple. Second is your disputed statutory dues. Whenever the statutory dues are disputed, the auditor will mention the amount of dispute and the forum where it is pending. Forum basically means your commissioner of income tax or income tax appellate tribunal or commissioner of customs. So whichever authority is handling that matter. So where the dispute is pending, you have to mention the forum. Simple. This is your clause 7. Clause 8. Whenever there is an undisclosed income, company had not showed some income, and that income was suddenly disclosed in this year, whether proper entries have been passed in the books of accounts. Basically, accounting treatment should be proper. That is what the auditor will check. There is our clause 8. Clause 9. Clause 9 is in relation to repayment of loans. So whenever this point is there, repayment of loans, you should keep in mind, for repayment of loans, company should have accepted some loan, correct? No. So if the company has accepted the loan, the auditor will do something called a DP Jasu. Okay, no. DP Jasu is basically D, P, and Jasu. D has 2 points, P has 2 points, Jasu has 2 points. D means default. If the company has made any kind of default, the auditor should provide lender-wise details. Lender-wise details means each bank-wise. Suppose if I have not paid loans of 3 banks, HDFC Bank, ICICI Bank, and Canara Bank. So I should provide the details in that format. So I should say HDFC Bank how much I have not paid, ICICI Bank how much I have not paid, Canara Bank how much I have not paid. That I should provide. That is called lender-wise details. Second, D is if the default is there, if the bank or financial institution has put the company under willful defaulter list. If the company is a willful defaulter, then the auditor will mention in the CARO report. It is like telling the shareholder, see, the company that you are investing in, that company is a willful defaulter. Okay, it's like that. Simple. Next is in relation to your P. P is in relation to loans which are taken should be used for their particular purpose. Second, short-term loans taken for long-term purpose. So both the P's are from purpose. Okay. JASU basically means this. See, if the company takes any kind of loan from the banks, and if it is meeting the obligation, they are taking the loan, and from that loan they are meeting the obligations of their joint venture associate subsidiary companies. Okay. In that case, the auditor will mention in the CARO report. Second, if the company is taking loan from the bank and the company is pledging the shares of joint venture associate subsidiary companies, pledging the shares. So they are taking the loan and you are pledging the shares of the joint venture associate subsidiary companies. That will also come under this category. Okay, that will also be covered in your clause 9. Okay, that is your DP JASU. So 2 points from D, 2 points from P, and 2 points from JASU. Next is in relation to clause 10. Clause 10 is whenever the company is doing any kind of IPO, FPO, any convertible securities the company is issuing, debt securities are there, private placement is there, preferential allotment is there. In that case, whether the amount the company is giving some kind of shares or debentures company is issuing, correct, or any security company is issuing. So when the company takes the money, whether money is used for the proper purpose or not. Okay. So for example, when we are doing the IPO, we must have mentioned that in the prospectus, correct. So in the prospectus, whatever we have mentioned, whether the money is used for that purpose or not. Simple. That is your clause 10. Clause 11, fraud. The auditor should mention in the audit report the amount of fraud, the nature of fraud. If any fraud was reported to CG under 143 subsection number 12, now you know this very well because if the amount is 1 crore and above, you have to report to the central government. And last but not the least, that is any complaints of whistleblower that the auditor has considered. So some whistleblower must have told the auditor, see, this director is doing some fraud, this person is doing this fraud. So any such complaints have we taken into consideration or not? That the auditor will mention in the CARO report. Clause 12. Clause 12 is about Nidhi company. So Nidhi company, what they have said is, The auditor will check three things. First, whether net owned funds to deposit ratio is 1:20. This I've explained in the class, so I've given examples for this. Second, if the deposits that the Nidhi company has collected, 10% of the deposits should be unencumbered. Unencumbered means not blocked. Okay. And finally, when the Nidhi company accepts deposits, they have to pay interest on time, and at the end of the period, they have to pay the principal amount to the depositor, to the person who is giving the money. So in this case, if is there any default in relation to interest or the principal amount, that the auditor will mention in the CARO report. Okay, that is basically your clause 12. Clause 13, related party transaction. Related party transaction, whether they are complying with section number 177 and 188 of the Companies Act 2013. That is what the auditor will check. Clause 14 is in relation to internal audit. Auditor will check two things in this: whether internal audit internal audit department of the company is commensurate with the size of the company. So auditor will see whether internal auditor is also as good as how big the company is, basically. Second, the statutory auditor will mention whether he has considered the report of the internal auditor or not. That he has to mention. Okay. Clause 15. Clause 15 is in relation to non-cash transactions. So if the company has entered into any kind of non-cash transactions, whether section number 192 of the Companies Act has been complied with or not. Okay. Next is clause 16. If the auditor is doing audit of an NBFC, whether the NBFC is properly registered under section 45IA of the RBI Act 1934. Second, if the NBFC is working with proper certificate of registration or not. Third, is the NBFC a CIC? CIC means core investment companies. Core investment companies are those NBFCs or those investment companies which only invest in the group companies. So I gave the Tata Group of Companies example in the class, so you should recollect that. Okay. Next is in relation to the number of CICs. So basically, if we are one CIC, in our group of companies, there are, let's say, other two CICs. So we should mention that we are one CIC and there are two other CICs in the group that you have to mention. Next is clause 17. If the company has suffered any kind of cash loss in the current year and the previous year, that the auditor will mention. I think as an investor, this point is a very important point to see as an investor. Okay, so if you are trying to invest heavily in some company, you should check this, whether company is going into any cash loss. Company has done any cash loss in the current year or in the previous year. Okay. Next is clause 18. Clause 18 says that the auditor should mention that was there any resignation by any statutory auditor in that year. See, if any statutory auditor has resigned, then the new auditor who is appointed is you, because you are making the CARO report, because you will be the auditor who will stay till the end, correct? So if the new auditor is appointed who is going to stay till the end, some auditor has resigned there because some auditor resigns and there was a casual vacancy and you filled the casual vacancy. So now you are making the CARO report. Okay. So you have to mention that during the year one statutory auditor had resigned, and you have to also mention whether you have looked into the issues and concerns that the previous statutory auditor has raised at the time of resignation or not. That you have to clearly mention in the CARO report. That is your clause 18. Clause 19 is in relation to whether company is capable of meeting its liabilities or not in the next 1 year. So from the end of the year, that is from the balance sheet date, for the next 1 year, whether the company is capable of meeting its liabilities or not. For this, the auditor should check 5 things. Very simple. Auditor should check the financial ratios, financial assets aging, that is basically debtors aging report he should take, the company's capability of paying the financial liabilities, the information given in the financial statements, and finally the last point, that is in relation to the management's plans with the company. So looking at these 5 points, the auditor should see whether the company has capability of meeting its liabilities or not. Okay. Next is clause 20, whether the company is transferring the funds to the special account, that is unpaid dividend account, in the case of ongoing projects, and in the case of other than ongoing project, where the company has transferred the fund properly to the fund mentioned in Schedule 7. So whether these two transfers have been made as per section number 135. And 135 we had done when we did CSR area in law. So whether the company has done these two transfers properly or not. And clause 21 finally is the CFS related matter. If there is any qualification or adverse remark in relation to the matters which are given in the CFS, auditor should give a proper correlation to that in the CARO report. He should mention the adverse opinions and the qualified opinions properly. That is what they are given in CARO. Simple. So this covers all the 21 clauses of CARO. and plus we saw the applicability part. In my opinion, applicability plus all 21 clauses, you should take that as the complete chapter. Applicability plus all 21 clauses. You should see it very carefully. Okay. I wish you all the best. Study well. If you like this video, please like it. Okay. On YouTube also. And if you want more such videos, please type in the comment section below that you like this video and you want more such videos. And I'll give this, snapshot revision video so that it is easier for you to revise it on the go or when you're traveling or anytime when you're getting free time. In quick way, you can revise. Okay. One more information. Any queries that you want to ask me in relation to audit or law, you can ask me on Instagram at ca.kartik.iyer, ca.kartik.iyer, and I'll be happy to answer your queries. Okay, but when you answer your queries, ask it in a proper manner with a proper, image or send something you're sending that, sir, what can be the answer to this, something like that. I'll be very happy to solve your issue. Okay, take care. See you. Bye.